What is up, traders? Welcome. I'm extremely excited about today's video. In today's video, you're going to learn what I consider to be the perfect beginner trading strategy. Now, I'm not going to sit here and tell you, watch this video today and you'll have a Lamborghini next week from trading this super simple strategy that I'm going to show you. Obviously, that would be bullshit. And if you hear anyone say that in front of a video or course or anything else, understand that it's bullshit. That's not what actually happens in the markets. But what I will tell you is that if you follow the instructions that I lay out for you in this video and actually go through every step in the process to creating this strategy, to actually using this strategy, then it will help you on your path to becoming a professional trader. And this strategy is not only going to give you an edge over the market if traded correctly, if tested correctly, if you do all the steps right. It won't only give you an edge over the market, but as you are now, if you are a beginner or if you're someone who's still struggling in the Forex market, then that struggle is due to a few factors. One of those being you may not understand the foundations of trading, which would be structure and trend. This strategy will help you practice that beyond belief. It actually has a lot to do with structure and trend. That's what we're going to talk about after the intro and disclaimer. It won't only help you with that, it'll help you with patience and with discipline as well. And those are some of the most important parts, especially as a beginner, to actually start to understand. So if you're interested in this strategy, if you're interested in all of that, make sure you are subscribed by clicking the button down below the video to the right-hand side. We do content like this each and every week. Click that like button for me. Follow us on Instagram. We're gonna start doing some giveaways for apparel, like what you see me wearing here, glasses, and also some giveaways on programs and courses that we offer. Some of our paid content, we'll be giving that away on Instagram, but you do have to follow us on Instagram for that to happen. Link is in the description. After all of that, I'm gonna go ahead and let the intro and disclaimer play, read through the disclaimer, and directly after that, we will talk more about what I consider to be the perfect beginner Forex trading strategy. I'll see you guys on the other side. Welcome back, guys. So we are about to jump into what I consider to be the perfect beginner Forex strategy. But first off, let's talk a little bit about what's important in a strategy in general. What's the main focus? The main point of having a strategy or a rule set that we follow. The main focus is that rule set gives us what we call an edge or advantage over the market. We need this to give us an edge because of the scenario I'm going to tell you right now. At this point, you've probably heard the analogy from trading to a casino, right? Like casinos, what do? Every single day, a person walks in a casino and they place bets on certain games. The casino may not win every single day. There may be days that the casino loses money, but overall, the casino has an advantage. Over the course of 12 months, the casino is going to make money based on the advantage it has. So your job is to be the casino, not the guy walking in to play games. Trading is not a game. You don't want to be the guy. You want to be the casino, and you want to make sure you have, let's say, a 55 to a 60% chance to win. With a 1-to-1 risk reward, that would be considered an advantage. Or maybe you have a 2-to-1 risk reward and you're winning 50% of your trades. That is an advantage. Those are a couple of the ways we can actually get an advantage over the market. So every time we're testing or trying to trade a strategy, we want to make sure that that strategy comes with an edge over the market. Now, one of the only ways I have personally ever found to figure out if a strategy has an edge over the market without risking live money, because that's not what we want to do at first. We don't want to just go out here and start throwing shit at the wall and hoping it sticks. We don't want to go out here and just start wasting our hard-earned money. That's not what trading's about. The best way to do this is to do something called backtesting. So in the process of backtesting, you're looking through historical data to find the strategy or the rule set that you have created. In this case, the one I'm going to give you here, the perfect beginner trading strategy. You're going to look through historical data to see, for one, what currency pairs it works best on. Let's all be honest here. I'm sure you've heard the phrase that every currency pair has a different personality, and it's absolutely true. There are certain currency pairs that trend really well. For instance, yen pairs tend to trend really well. So if we're trading a trend continuation strategy, we want to test yen pairs first and see which ones we come up with the best results on, just as a very short example. So we're testing for that, and also to help us figure out what we have in terms of a maximum drawdown to help us optimize the portfolio of pairs we're going to use. If you're brand new to trading, a lot of this is probably going over your head, but we're going to discuss it again after you learn the strategy. Now, let's dive into the technical aspect of the actual strategy you're going to learn today. So In today's video, I'm going to teach you a strategy that's going to help you with understanding structure and trend and also entry reasons, and it'll help you understand the structure of a strategy. Not only that, it will help you understand the structure of creating a trading plan around a strategy. The strategy we're going to talk about today, though, has two different ways to enter this specific strategy. So first off, let's talk about the trend continuation version of this strategy. It's going to be a very simple strategy for those of you who already understand trend, semi-difficult strategy for those of you who don't understand what trend is yet. So a trending market is going to be a market that makes at least what I call a 1, 2, 3 move. 1 there, 2 there, 3 breaking below the previous lows. This outside return or pullback must have at least 2 green candles. Okay, if we have a push down that's impulsive, we have 2 green candles pulling back and a break below this structure level, I consider that a trend, a trending move. So if we have a trending move, our trend continuation play, and as I was saying earlier, this strategy is going to teach you patience, because at no point, if you're using this strategy or when you test this strategy, will you trade unless these circumstances are exactly met. The only time you place a trade, whenever you're testing this, the only time you test to place a trade, the only time I would place a trade based on this strategy is once the market gets back up to only this previous low. Okay? We're going to do this on a chart to make it easier to understand in a minute, but only at the point that the market makes it back up to that previous low, that is the only time you look for a trade. No other time are you looking for a trade when it comes to trend continuation. So this is going to be one of the perfect ways to start trading as a beginner. And one thing I forgot to mention, only do this on a daily chart. For now, if you're just starting out, or even if you're someone who's not profitable, unfortunately, a lot of us come into the Forex market, me included, when I first started, a lot of us come into the Forex market expecting to be able to quit our jobs in a month and be trading from a large enough account to where we don't have to work anymore and we can provide for ourselves or our families. Unfortunately, especially if you're here, hopefully you've already figured this out. That's not what normally happens. Don't be afraid to be patient, not only in your trades, but in your journey to becoming profitable. Trading on the daily chart will keep you from making some of the detrimental mistakes that you could be making in a day trading account that would cause you to bleed your account dry. So trade on a daily chart. Give yourself time. If you have a full-time job, trading on a daily chart is not going to be super hard, especially in the way we're going to enter the market. If you decide to test and trade this, that's your decision, not mine. I'm not a financial advisor. I cannot tell you how to spend your money. I don't know your financial situation, but this is me suggesting something that I've done in the past that helped me on my path to profitable trading. Make your own decision, but if it were me, the way I would enter such strategy, a strategy like this, is once we hit this level, let's say we have a candle that touches that level, I would enter in 2 ways. 1, a shooting star candle, hammer, if we flip this to bullish, and we'll do an example of that in a second, or an engulfing candle at this area after the touch. Those are there's no other entry. That's it. This is why it's so important to be patient. What you're going to do is go through historical data, and you're going to test when you see a 1, 2, 3 trend move, like what's on the screen in front of you, and then you see a shooting star candle, and test them separately, and then you place an entry here. Let's say your stop loss is 1 ATR. ATR is an indicator you can find on TradingView. That's the platform I use. ATR is one of the very first indicators that pops up once you click the indicator button on TradingView. So you use an ATR indicator to figure out the stop loss. Let's say it's above this high by 1 ATR. You put your target either back down at previous structure or a 1-to-1 risk reward. Totally up to you how you do targets. Personally, I set mine at a 1-to-1 risk reward. I do multiple targets, but if you're a beginner, it's not how you need to take targets. Either do a 1-to-1 risk reward or back at previous structure for trend continuation. And don't let that limit you once you get good at this part of it. Again, we're working towards you being able to build an even better strategy. This is a simple version that's easy for you to accomplish every day because you're getting off work and the daily candle closes at 5 p.m. Eastern, and you can actually look at that candle and say, was it a shooting star candle? Did it touch my most previous level of structure? Can I place this trade? Then you can set your stop loss however you want to and your target however you want to. These are just examples. But in this case, you would take this and test this exact situation through historical data as far back as you can go and see how many times over the lifetime of as far as you can go back did this work out as a winning trade. If you come up with 55 to a 60% chance of winning with a 1-to-1 or above risk reward, then you have an obvious edge or advantage over the market, which is exactly what we're trying to accomplish. So to go over this once more, we'll do a bullish version this time, just to make the trend continuation section of this extremely understandable so that you get it completely. And we'll go to the chart directly after this to engrave it even more in your brain. Looking for an impulsive move. A pullback. This pullback has at least 2 candles. We're looking for the market to break above that high before the pullback. After the market breaks above the high before the pullback, we're waiting for the market to pull back again, touch that high. Once we touch that high, we have 2 ways we can enter. Either a hammer candle, because we're bullish now, not a shooting star, a hammer candle, or an engulfing candle. Those are the only 2 ways that I would enter the market in this specific situation. Stop loss would be below the low of the entry candle. For me, at least, you can test this and trade it however you would like to, but for me, and if you're going to use this example when you're testing, that's how you'll want to test it. And your target can be back up at previous resistance or set at a 1-to-1 risk reward, whichever one you prefer. That is going to be the entirety of the trend continuation portion of what I think is the perfect beginner trading strategy. And the reason I think this is perfect is because not only if traded on the correct pairs, if tested correctly and you have the right risk management plan and you do everything correctly in terms of creating an actual trading plan around this strategy, it will not only give you an edge over the market, but it'll teach you patience, because we're trading it on a daily chart. We're having to wait at some points days for a trade, which is totally fine as a beginner. Slow down. If you're a beginner, don't be in a hurry to blow your account. If you're a beginner and you don't have a strategy that's providing you an edge over the market, you don't need to be in a hurry to keep trading that strategy or to keep trading some strategy you heard from another trader, and don't just go out and trade this one. That's exactly what I mean. If you haven't tested the strategy you heard from another trader that told you you could buy a Lamborghini tomorrow from it, then go test it. See if it actually provides an edge over the market. Make sure you're the decider of where your money goes and not someone else. Don't take my word for this strategy. Go out in the markets and test it yourself. It's necessary not only to see if I'm telling the truth, but so you can create a risk management plan, so you can optimize to trade this with the best pairs, so that you can actually see that it provides an edge over the market as well and gain some confidence in the strategy. All of that's important. So doing this on a daily chart, we're going to go to a daily chart now on the pound New Zealand, and I'm going to show you a few examples and give you an idea of how to actually back test this specific type of strategy. Let's just scroll back. I have not even done this yet. I have no idea what this is going to come up with. It may come up as negative. I have no clue. And even if that's the case, it's your job to go through the markets and actually find a ton of situations. You have to have a big sample size. I do at least 100 trades in a back test. So when you do that testing through historical data, hit at least 100 trades or more. So here, we're going to start at the bottom of this little period of consolidation we had right here. Okay. And if we're looking at this, and remember, we're looking for 2 candle pullbacks after an impulsive move. For our pullback, we have this up to this high. We have a pullback of 2 candles here, but nothing broke this high. And until something breaks this high, then the low of our pullback is below that high. The lowest low below this high before the break above it is going to be the low of our pullback. So the way we would draw this out would look something like this. Push up, pull back, break and close above what? This previous high. Once we break and close above that high, in order to test this strategy, I would be putting a horizontal line there at the high of the wick. And if we get a market that pulls back like this one here, as we push up, now we pull back to the high of that previous resistance level. This is the area that we're looking at. This is one of the conditions of our strategy. This is the only area we're looking at for trades during the trend continuation portion of the strategy. So we get the pullback, it touches that wick. At this point, what are the 2 ways we can enter? Either a hammer candlestick or an engulfing candlestick. A hammer candlestick, you can define that how you would like to. I like just using a Fibonacci retracement and pulling it over the entire candle. And if the candle is above a 382 retracement, I consider it a hammer candlestick. This would meet that criteria. Maybe. Yes, this would meet that criteria. This candle here would be my entry candle because it's a hammer candle after hitting the most previous level of resistance in an uptrend. Remember, how are we defining trend? The reason we're in an uptrend is because we have our 1, 2, 3 move. 1, 2, 3 in an uptrend. We pull back to that resistance level, we get a hammer candlestick. At this point is when I would enter the market. So let's go ahead and put a position tool on. The rest of these will go a lot faster. I just want to make sure you really understand this. The close of that candle would be the entry. This is a daily chart. Even if you have a full-time job, you should be able to enter the market here. And remember, don't go out and start trading this. I'm telling you right now, do not go out and randomly start trading this strategy, because what will happen to you is what happens to every trader that does that. You will trade this, you'll lose 3 trades, and you'll go, Steven doesn't know what he's talking about. That's just stupid. In reality, I'm a professional trader. Do you know how many times I've lost 3 trades in a row on the strategies I use right now that I consider to be very good strategies? Multiple times. You're not prepared for that if you haven't went out and tested this strategy yourself. You're not prepared for that if you haven't put in the work yourself. Don't sit here and take my word for this. Go out and test it yourself. But in this specific case, we would do an ATR stop. ATR is 140. 140 plus 85, let's say, would be 225. Let's get down to 225. And in this specific case, I would probably do, we're close enough, 223. I would probably do a 1-to-1 risk reward here, just because my resistance level is so close by that if I did this, it would be a 0.36 risk reward. That's not what I would want. So I would go ahead and do a 1-to-1 risk reward. We're in an uptrend. I consider this market an uptrend. I'm thinking we go higher here anyway. So I would go 1-to-1 risk reward. That would be a win, right? So there we have a winning trade. Let's continue now. And again, it'll speed up a lot now at this point. So after that move, we'll be looking here. Boom, boom, 2 candle pullback. The market breaks and closes above that level. Do we get back down to this level? Here is where patience comes in. A lot of traders go, well, man, I missed out on this whole move. Missing out on moves is a part of trading. It happens to everybody. You're not going to be able to catch every single big move up that happens in the market. No one can. If I could predict exactly what the market was going to do, if I could catch every single big move, I would put 100% of my account on these moves. No one can do that. So don't be scared of missing moves every now and then. That's okay. That happens. And in this case, especially, the most important part of having a trading strategy and a trading plan is following that plan. If your plan says, I'm going to trade only when we get to previous resistance for trend continuation, and the market doesn't get to previous resistance, then you don't trade. Very simple. So in this case, we would have missed this move. We would not have traded. We keep drawing out here. We have the push up. Where's the lowest low from this high before it gets broken and closed above? Looks like it's right here. So this is the lowest low of the pullback. This is how we would draw this out. Push up, pull back, push up. We don't get any kind of entry here. The market continues to pull down. We come into this level of resistance right here. Since we come into that level of resistance right back here, and actually we don't quite hit it. So if you have set in stone rules of the market must come down and hit the high of the previous resistance level, and the market doesn't, what do you think you do? Nothing. You don't trade. So in this case, we would have traded absolutely nothing. And you have to understand that that's a part of trading. Now, let's see. Do we get a break and close here? Above this high? We do. We get a break and close on this candle. I know it was a very small break and close, but a break and close nonetheless. We pull this down, and we don't end up getting any kind of entry there. We get another break and close, and here we actually have an entry that ended up being a losing trade. Continuing. Guys, the next trade was actually pretty far away, but right here we have a move down that pushes back up here, pushes back down here, and then we have a break and a close above this previous resistance level. We then have a market that pulls down into that resistance level, gives a shooting star candle, and would have been a winning trade. And this strategy, again, remember, we're not winning every single trade, and we just looked at a loss. We'll have losses as well. There's going to be times where this strategy loses. That's a part of trading. As I said, I've lost 3 trades in a row plenty of times. In order to figure out what your actual winning percentage is on a specific pair, look at historical data, see how it's performed in the past. And although that's not exactly how it will perform in the future, it's literally the best thing we have in order to measure with. If I could just predict the markets like a psychic, then obviously 100% of my account will be on every trade, and I would be a billionaire right now. I'm not. And I can't predict the markets like a psychic. No one can. That's why we just have to stick to having an advantage, and the way we see if we have an advantage again through that back testing process. And now let's actually see if we can find a live example of this in the market. So I'm going to go through every single pair, and we're going to see if there's an example of it. Actually, the euro dollar did an example of this last week, and we had this level pointed out in last week's video as a major level of structure. The market came into that level, put in a nice shooting star candle, and it did push the market down quite a bit. We've now pushed back up into that level a little, but that was another example of a winning scenario. We're going to look for something that's actually happening right now, though. So let's look and see if there's any market that's actually doing this at this very moment. All right, guys, so we found a market that's actually doing this right now, a potential trading opportunity based on this strategy right here on the pound New Zealand. And on the pound New Zealand, what we have is a market that broke above, and this is actually the same pair that we were just looking at, but we have a market that just broke above a level of structure resistance right here. Because of that, do we have our like 1, 2, 3 move? We do 1, 2, 3. Because we have that 1, 2, 3 move, we're going to be looking at first right here to see if we can get a pullback into that area and either a shooting star or an engulfing candle here on the daily chart. We'll set our stops and targets appropriately based on that. If we were trading this exact strategy, if you're trading the perfect for beginner trend continuation strategy, this is what the trade would look like. Again, go through all of the necessary processes. You will not know what your risk management plan needs to be if you don't do the back testing. You will not know what pairs this works best on. The pound New Zealand and the Euro Canada would be the two pairs I would suggest you start with. Both of those respect structure extremely well. Yen pairs also respect structure extremely well. So there's where you can start your testing. Daily chart on those pairs, test 100 times of this exact thing happening, exactly as we just discussed, and then see what the winning percentage has been in the past. Again, it's the only measuring stick we have to see how the market could react in the future. So it's what I base every strategy I trade on, and that's worked out really well for me. So do that process to build the whole trading plan. Don't just go out here with a strategy and trade blindly. You want to build a whole trading plan, which is going to consist of all the rules of the strategy, a risk management plan that will tell you how much you can risk per trade, and the optimized pairs that you're going to trade with this strategy. There's a lot of Forex pairs, and all of them don't respect structure in the same ways. All of them have different personalities. Some of them respect structure and trend a lot more than others. I was going to do a counter trend strategy here as well, but this video has already gotten close to 20 minutes long or more. So because of that, I'm going to wait and save that for the next video. And I cannot stress enough the importance of risk management, the importance of being disciplined to this. I know this strategy will help you on learning structure, learning trend, and also becoming patient, disciplined, and working on your risk management. So do all of the steps necessary. Make sure to do your own testing as we just discussed. I hope you guys have a great rest of your week. Don't forget, follow us on Instagram. Check the links in the description for some of our free content as well as some of our paid content. If this was valuable to you, then getting into some of our paid content, I'm sure you'll see a couple of comments below this video of traders who have been through it. We've helped hundreds of traders on their path to profitable trading through a systematic approach, close to what we taught you here, a very systematic approach to creating their own personalized trading plan and even giving them my personal trading plan for them to go out in the markets, test, and copy. So if that's something you're interested in, check the link in the description. Free trainings, Instagram, subscribe. Make sure you're alerted about all the valuable content we come out with here at the Trading Channel. I wish you guys the best of luck on all your future trades, and I will talk to you very soon. See you there.